Welcome to Candlelight, where price is a mechanical function. In this video, I'm going to be talking really the time frames you should be looking at as an investor and the time frames you should be looking at as a trader. Now, investors are a lot more passive. For most people, they want to buy something and stay in it for a while. You don't really want to be looking at your charts 2 or 3 times a day, or maybe every day. You want to look at your charts maybe once or twice a week, something like that. Make sure things are going your way and price is doing what it should be doing. As a trader, traders are a lot more active. It's a lot higher frequency. Depending, you can be a swing trader or a position trader. Which essentially is pretty much the exact same thing as investing. It's a lot more long term positions. But you can even have like a day trader who goes down to all the way to 1 or 2 minute charts and will make several trades a day. They both function on the exact same things, and you should all on both trading and investing. If you go long, you want to buy low and sell high, and if you go short, you want to sell high and buy low. It's really exactly the same, other than the time frames you're looking at. So as an investor, you want to be looking at larger time frame charts, monthlies, weeklies, and dailies. And as a trader, you want to be a bit more active, so you want to catch a move that will go 2 or 3 days, or even a move that goes for about 15 minutes, either one. But it's going to be smaller time frame charts, maybe like dailies, a daily chart of 240, which is 4 hours, a 240 minute, which is 4 hours, and an hourly chart, maybe all the way down to like a 5 minute. So let me give you a couple of examples of what a investor should be looking at in terms of this time frame on his charts, and what a day trader should be looking at. Let's get into it. All right, as an investor, you want to be looking at slower, larger time frame charts. In this case, this is kind of what it would look like. You want to have multiple time frame analysis, so you can kind of get larger time frame that would be on the left hand side, which would be a monthly chart. Every candlestick represents 1 month, down to a weekly chart. Every candlestick represents 1 week, and then down to a daily chart. This is the euro, but it works for any asset class and any chart, really. Stocks, cryptos, anything. Right here you have a demand zone. You want to buy low and sell high. Now, this move started from 2020, and we're about halfway through 2021. This move would have gone for the better part of a year, but you get in demand, and you can go to a smaller time frame chart, such as this weekly, put a trend line on, and as soon as it breaks your trend line, you sell high. You would have bought down here in demand and then sold all the way up here. It would have taken the better part of a year, but that's a slower move that you can appreciate, not having to look at your charts every day or so. So as an investor, you want to go for larger time frame moves, to where it's a bit more passive, it's not as active, and it's a bit more calmed down. Now, what time frame should a day trader or trader be focused on a bit more? Let's look into that. A trader trades a lot more actively. So while you should be looking at monthlies and weeklies, those moves take a long time. So I'm partial to using mainly these 3 charts, which would be a daily chart as my larger time frame perspective, down to a 240 minute, which is 4 hours, down to a 60. Now, when it really comes down to taking down a shot, or to going into a trade, I will go all the way down to a 5-minute chart. But for the most part, this is all you need. This is where demand is, down here, and supply is up here. So that move alone, or just the time it took to come or to move from this low all the way to this high, was what, 2 months, something like that. So still very large. It's a large time frame, a perspective or time frame. But when price gets into those areas, you'll have 2 or 3 days of really good ballistic movement in demand, hopefully to the upside, and in supply, hopefully to the downside. And if you look at enough of those charts, then you can definitely get a shot or two, every day or every other day. So you should be looking at daily charts, because most of the industry looks at it daily. That's just, it's very standard. Most of Wall Street and the whole world really looks at price action on a daily basis, or on a daily time frame. So it really does behoove you to have a daily chart up and present, so you can have a very widely accepted time frame and the zones that they would yield you, present. Then you go down to a 240, and this is where a lot of Wall Street, like the Wall Street day traders use, because they're using such large amounts of money. They can't be going in, or they do go into smaller time frames, but institutions that provide their day traders with capital, they tend to use 240-minute because you can still get really good position trades. In other words, they're in a move for 2-3 days, maybe 4 days a week or something like that. And for institutions, that's pretty nimble. That's pretty active, considering they're moving hundreds of millions of dollars around. So that's why I like to use 240s. Is Wall Street traders or Wall Street day traders, the institutional traders, they use 240 minutes a lot. So that's a really good time frame to have. But people also use 180-minute charts and stuff, or 120-minute charts, as their intermediate between a daily chart and you're going into the really 5-minute charts kind of movement. 240-minute, it's a pretty happy medium, and Wall Street uses it a lot. And then the hourly chart, which is also very popular, and you want to be looking at what most people look at. So an hourly chart is a good thing to have up. And like I said, whenever I go into a trade and price is in my daily demand zone, within a 240-minute demand zone on top of that, and then also entering my 60-minute zone, then I'll go into a 5-minute and take a shot. But mainly, those are the two kind of perspectives or time frames you should have up as an investor and as a day trader. So this is a quick video, but I hope it helped, and safe trading. Talk to you later, guys.